at Metropole TVKE across all your social media platforms. Hashtag business I am. My name is Simba Elijah Charles Kiage. I am at Kiage Simba on a Twitter. Let's get talking this morning on this particular areas that we are asking you this morning. But then let's dial it back. It's pretty early in 2022 and talk about financial inclusion. Now, in an attempt to deepen financial inclusion, microfinance organizations are introducing digital solutions to serve low-income households and small and medium-sized enterprises. Mobile financial services and fintech solutions are particularly promising in Africa, where, according to MasterCard Foundation, financial inclusion is only 43%, whereas mobile phone penetration is almost 90%. Such solutions show promise. In Kenya, for instance, mobile financial services, specifically mobile money, contributed to increasing financial inclusion from 26.7% to 82.9% between 2006 and 2019. Microfinance organizations have two goals: one, to increase financial inclusion, and the other, to be financially profitable, or at least financially sustainable. Now, balancing those goals is not easy, as leadership must choose between prioritizing social impact versus financial performance, and must consider changes that come with time, investments, environmental fluctuations, innovations, and the like. Today, we feature Mobile Financial Solutions Technologies Limited, MFS Tech, and we're joined in the studio by the Managing Director, Fred Michuki, and is also the Principal Officer in Shuami Kenya Tech. Now, Fred has worked with the Standard Chartered Bank as a commercial banking managing director. Now, Kenya and East Africa headed a regional sport and forwards foreign exchange trading desks, both at the City Financial Services, New York. Fred, good morning, sir.
Good morning, sir.
Happy to have you around.
Thank you very much.
All right, let me begin from that particular aspect as well. I mean, when we're talking about mobile or financial inclusion in the country, I think you are best placed to tell us where we are, why we are not yet there, and where we are headed, especially in a 2022, a time when a 2020 gave us lessons that you need to include tech in everything that you're doing, especially in your economy, if you want it to tick. So I want you to start from 2020, if indeed you've seen that jump, but then you give us an outlook of where we are as a country when it comes to financial inclusion.
Okay, so thank you very much, Elijah. I think when we look at financial inclusion, we need to understand what we mean by that phrase and terminology. Because what has predominantly happened over the last 3, 4, 5 years is that we see a lot of activity around mobile lending, okay?
Yes.
And that's where there's been quite a bit of focus, even as far as the regulator is concerned. So you hear a lot of talk, a lot of commentary, a lot of feedback coming from the Central Bank of Kenya and all those also who are regulated by that entity.
Yes.
So I would say that there's been quite a fixation around mobile lending. But as I said, if we take a step back and ask ourselves, what is financial inclusion? We must, if we're to be fair to the common individual who we're trying to extend this financial inclusion to, we must be cognizant of the fact that financial inclusion involves a lot more financial services. So where is the conversation around savings and actual liability or resource mobilization? Because those savings invariably are the ones that, if put into productive areas of the economy, are what then spur what I guess we'll be talking about SME funding.
Yes.
So when you look at countries, let's take Asia for instance. You can take almost any country that's in Asia, whether it is Singapore, Malaysia, Indonesia, China. The savings culture is extremely strong, okay? And therefore it's called delayed gratification, if you will. So you find that from the very smallest person in the economy, that could be somebody even who's a sweeper, all the way to even those who are very seriously engaged in the economy, the mentality around mobile saving or about savings is very deeply ingrained. And because of that ability of the economy to put their resources together into financial institutions, it's the same money that eventually then is lent to the same people. So financial inclusion in as far as Kenya is concerned, and you said, let's go back to 2020.
Yes.
We can even look at maybe, let's say 2019, because technically that's when really the economy closed.
Yes.
Around March, when, we were visited by COVID and we had to take drastic actions as a government to safeguard the interests of the people. So let me speak for an experience that we went through as Mobile Financial Solutions. We're very involved in what we call retail lending or last mile lending. What does this mean? That for us, our customer, when we talk about financial inclusion, is really that person who is a sole proprietor, actually, running a business in a kiosk, running a business in a salon, running a business in a butchery, a single individual, but engaged in business in one way or another. I often say that a kiosk, to me, is like Naivas or Tuskys, because if you go inside to that particular business venture, you're going to find BAT. He's selling cigarettes, isn't it?
Yes, yes.
He's selling Coca-Cola.
Yes.
He's selling diapers, so that's Procter & Gamble. So you can't really say that there's a difference between this kiosk and the supermarket, so to speak, where, then the larger activity takes place. He's serving the same purpose, and actually he's serving 80 or 90% of the population at that last mile level. So going back to 2019, when we had this disease or virus visit upon us and the country is closed, we took a decision, because we have people on the ground who engage with customers, recruit them onto our platform, our lending platform, and it's a really face-to-face kind of engagement. Because of the fear of the virus, we had to sort of like shut down our business.
Yes.
All right? To safeguard the health interests of our people. But I put it to you, Elijah, that it is during that period, from March 2019 to date, where there was the most activity ever in as far as FMCG is concerned on the ground. You would imagine that business would be scaled back, isn't it? We've seen a lot of activity and a lot of impact in areas like, let's say, hospitality.
Yes.
Because hotels were hit, isn't it? Bars, you talk to KBL, the activity around bars was hit significantly, because now people were forced to, shift back to any activities that they're undertaking will be at home, isn't it?
Yes.
But when you talk to the person who's running a kiosk, the one who's selling bread, the one who's selling cigarettes, the one who's selling sugar, you remember now everybody is back home. Even the maid, the child has come home from school and is resident at home. We ourselves, if you want to call us in the middle class and so on and so forth, you didn't fire the maid, you didn't fire the house help because of this disease that had come. Life continued. So if you talk to anybody who was in FMCG, 2019, 2020, even 2021, you're reporting the results, isn't it?
Yes, yes.
You look at EABL, it is wines and spirits that drove them up. It is not the traditional beer business, isn't it? This is where we've seen some 6, 7, 8% growth, which we never saw before. If you look at their numbers historically, they've relatively been flat, isn't it? You've recorded about BAT. Now look at all the others. And you will see there's been an upward trend. Consumption, all right, at the home base. And as a result of that, you'll find that those manufacturers who are involved in this fast-moving consumer business have done very well over the last 2 to 3 years.
Yes.
Okay? So when we talk about financial inclusion, you will find that now a lot of players who are coming into the market are really trying to move people into more use of their mobile phone. Safaricom is doing a good job right now in terms of getting people to shift from the Mulika Mwizi to smartphones. So they've got their Lipa Mdogo Mdogo kind of program. And you'll find there are also other players in the market who are also financing individuals to purchase phones and pay on a monthly basis, on a daily basis, 20 bob, 50 bob, isn't it? It's that drive to get to digital. So now you see that what has happened over the last few months, people like Sandy, people like Jumia, people like Glovo, everything has shot up, isn't it? In fact, if you want to look at it from another perspective, look at the purchases of border purchases on a monthly basis.
Yes.
200, 250,000 a month. This has been going on for some time. okay, over the last 2 to 3 years. All these guys who are coming in to purchase these vehicles, they're getting some financing one way or the other, either through Car in General, either through Stanbic, who have given some facilities. You secure against the asset, isn't it?
Yes.
But it's going through. So what does this imply? This delivery that is digital, this engagement that was not there prior to 2019, that now requires a lot of delivery of things, and so on and so forth. We are seeing the economy slowly becoming very digitized and people moving more towards you know, mobile activity and financial inclusion. But as I said, what about the mobilization of savings? Very important when you look at it from a financial inclusion perspective. What about things to do with insurance? We'll be talking a little bit about insurance later. That is what also actually drove us into this area of trying to provide insurance, again, for last mile. Because when you look at penetration in the market, depending on whether you look at your statistics, it could be anywhere from 2.3% to just below 3%, right?
Yes.
I'm talking about in terms of penetration.
Yes.
The way they calculate penetration, obviously they take GDP. Our GDP is growing in multitudes, GDP, and then against the gross underwritten premiums.
Yes.
It might not be necessarily the right measure, but that's what we have for the time being. So then what you find is that, of course, as a metric, if that is also part of financial inclusion, then from the insurance perspective, we're not doing well. Actually, we've been reducing over the last 4 or 5 years in as far as penetration is concerned. And when you talk to the common man down there and say, okay, why don't you have an insurance cover for funeral services? You know, instead of getting into this thing of mchango, where inevitably something is going to happen either to yourself or to a family member or to a friend, and you're going to be asked for 500 to 1,000 shillings, that is inevitable. Why not just put 50 shillings every month aside? But you see, we have to even look at ourselves from an African cultural perspective. This implied safety net exists. Today, it's me who has a problem, and I know I can reach out to Elijah. Yes. Elijah will definitely help me with 500 or 1,000, because tomorrow, when this is his turn, he's going to come to me, and I'll be there. So there's an implied safety net around insurance. But you see, it's not guaranteed, yeah? Somewhat, but it is, in a way. When that emergency comes, we'll be able to put something together. So now I'm talking about financial literacy. Yes. That's where I'm heading into now, isn't it? Yes. That there is a responsibility that we ourselves have, even those who are engaged in these financial services, to educate those people that we're working with on the ground. I believe that government also has a role to play in as far as extending financial literacy, because people need to understand why is it important for you to actually make that monthly commitment to put something aside so that you can safeguard your future and those kind of things. Yes.
All right. Now, let me also draw back a little bit. I mean, you've been in this particular space for 12 years in the country. That's quite a long time. You yourselves, when you look at the way in which you've morphed as a business, would you say that indeed you've changed with the needs of this particular space? And if you've changed, to what direction have you changed as a company, and what are those specific needs now that we can look at and say, well, MFS couldn't have given you this a couple of years ago, but now they are actually right within this space?
Yes, so yeah, we've been around actually for its 10 years.
Yes.
And last week, 16th of February, was actually our 10-year anniversary. And we've definitely changed. As the industry has changed, yes. As let me say, opportunities have presented themselves, because the first principle is that we approach technology in financial services as a channel. It's really a channel to try to solve for problems. Yes. So that's the first principle. We're trying to solve for a problem, or somewhere where there's some friction, okay, using technology. So when we started our journey 10 years ago, there were no mobile lending platforms at all. Okay, we were the first ones in the business. Actually, Mshwari and then ourselves. Yes. Where we launched a product with Kenya Commercial Bank called KCB Mobilization. I think it's quite well known in the market. And so our basic principle at that time was to provide technology solutions to financial institutions, isn't it? Banks and SACCOs, yes. to enable them to meet their customers' needs. Yes. And the first thing that we started off with was mobile loans at that time, right? And you can see how it has become so pervasive until today. As I said, financial inclusion is really synonymous with lending, mobile lending. Yes. But anyway, after about 5 years, so let's say about 2015, 2016, because of my engagements in the bank, I was able to look at different value streams. So we start off with a manufacturer who's producing some good. It could be Bidco, oil refineries making products for the ground. It could be KBL, who is making beer, whatever it may be. The manufacturer has got a role. They're the ones who make the final product. That product then, one way or another, has to be delivered to you. Okay? It could be in the supermarket, or it could be in the kiosk, or it could be the local wholesaler. It has to get there. So how does this product then move from the manufacturer to that retail level? In between here, there's distribution. Very serious distribution that happens, okay?
Yes.
And these guys push serious volumes, all right? Distributing all over the country. So you have big players, you know, some of the names that we use, like from our Moranga, is like Roadia distributors.
Yes.
These guys who have been there for the longest time, isn't it?
Yes.
They control large territories, they know how they push cigarettes, they move soda, they move beer, there's a distributor. And then from there, this distributor is taking now product into the last mile, into your local, isn't it? Into your kiosk. So he invests in vehicles, he invests in people, and he's pushing product there. Now, what is very interesting is this, what I found from my banking, is that between manufacturer and distributor, here there's a very strong conversation with financial institutions around the facilities to provide them.
I see.
Of course. You see, the distributor, when he's pushing, let's say, on behalf of EABL, he's been given a territory, Westlands, Kileleshwa, Kilimani,
yes,
his annual turnover can be anywhere between 2 billion to 5 billion shillings.
Yes.
Okay, so it's quite significant. It then warrants him to have a conversation with a bank or a financial institution, isn't it? He can sit across and say, these are my cash flows, all right? You can see my business, it's very tangible, and therefore, please provide me some financing for trucks, for whatever he may need to push his business. But now, where does this product get consumed? It gets consumed at the kiosk level, or at the bar level, down there, isn't it?
It's not on the road, is it?
It's all, exactly. Now,
yes.
Who's talking for that guy? Who's actually having a conversation to say, that lady called Jemima Wanjiku, who owns that kiosk, who gets up in the morning, by the way, 4:35 in the morning, where DPL Festive, bread guy is coming, Superloaf guy is coming, the guy who does Coca-Cola is coming, they all come every day or every other day to deliver stock to her. She's dealing in cash. Either she has that money to be able to purchase those stocks, because he'll never give her credit.
Yes.
Isn't it?
Yes.
He's not going to give her credit. So either she has cash to purchase those stocks, or she can't do any business. In other words, even for her to grow, assuming maybe she does purchases, let's just say hypothetically, 50,000 shillings per week, okay?
Yes.
Of different goods.
Yes.
She knows how her working capital cycle is. Every 2-3 days, I need to stock up on this. Let's say she wants to move from 50,000 to 100,000. How does she move?
She's going to go for credit, isn't it?
Where is she getting the credit from? Do you understand where I'm coming from?
Yes.
So this other part is very structured. That's what I'm trying to drive at. The manufacturer and distributor part is quite structured. You can go to the bank, you can go to a microfinance, you can offer some collateral. This other one doesn't have collateral.
I see.
They don't have collateral. Yet they're so significant in as far as spurring the economy and being part and parcel of that movement of cash. So that's where we saw an opportunity. We said, you know what? The same way that this distributor, somebody comes to talk to them and offers them a financial solution, we must be able to talk to these people on the ground and find out what their problems are.
Because the chain ends there.
Correct. The chain ends here.
In fact, you can actually say it starts from there and then goes all the way upwards.
Good, because this is where the demand is created.
Yes.
You understand? So now, what we then decided to do was, I said, hey, you know what? We've got some technology. That's why I'm saying that technology is a channel. All right? We've got some technology. We've been doing this mobile lending for some time. With KCB, with so on and so forth. It's the same engine. All right? How do we take this technology that we've been using and then flip it around, using the same tech, but now dealing with a different use case, trying to solve for a different problem.
I see.
So what we did was then we went to the distributor. Now you go to the distributor. You're the guy who distributes to this person directly, isn't it? Tell us about them. What's your relationship with them? What are their margins? You're the whole, you buy at wholesale, you give to them at retail. What are their margins? How much money do they make there in between? How often do they turn over? Is it every, because you see, these guys are not there for 6-month money. He's every 2-3 days.
Every 2-3 days.
And their profit margins are good.
Yes.
They're making 20-30%, 20-30%.
Yes.
So once you're able to understand that, then you say with a distributor. So you're saying this guy, every 2 days you're supplying him. Every 2 days, every 3 days. I think we can work together. Because you know him, you have a relationship with him. Okay, we can come in as a partner. This is what we have. We have this technology. We may have some also financial partners behind us, the owners of balance sheet, who are interested in getting into last mile but don't really know how to get there. But since we are the ones who, we are rolling up our sleeves, we are now creating a product that meets the needs of this person. We will provide this person with some credit, all right? This credit will be injected directly to the distributor. We won't put any money in M-Pesa account. No, we pay the distributor, either in his bank account, or we pay in his M-Pesa account, so that he can come and release stock to this person, so that they can continue their trading. Isn't that stock financing?
That's stock financing, isn't it?
Correct.
Yes.
That's all. Really, that's what I'm trying to drive at. That it's looking for where the challenge is and where the gap is, and then looking for the right partners. For instance, I could not go directly to this retail outlet, the kiosk or the bar, and then just give them credit directly. My money will get lost. It must be tied into this business activity, this economic activity. As you said, that starts from the ground, moves to distributor. Isn't that same money the same one that's going to end up in KBL? It's because the distributor must pay KBL.
It's pretty much the same money.
And then that's what now comes to your reporting.
Yes.
When you say 5% or 6%.
Yes.
Correct.
Fantastic. Now, I mean, when you look at where we are, I gotta ask you this as well. You like to think that if you look at the mobile penetration levels in the country, because that's an area that you're also really well embedded in, some people say it's more than 100% because it's been proven the majority of Kenyans have more than one mobile phone. Some people tell you it's now above 70% if you go by the one single handset kind of model. But then you sit back and then you say, well, but the financial inclusion levels are way below 50%. Then you ask yourself the question, what is not going on? And I want you to talk to me from government policy perspective. Is that where we're really failing?
Well, I'm not very sure as to whether it is can solely be pinned onto government policy, but it does have a role to play.
Yes.
Look, I talked about resource mobilization or deposit mobilization.
Yes.
As being an integral part of anything that you would want to call financial inclusion. Mobile penetration, yes, as you say, it could be 100%, could be this or that. This will really speak to the success of a payment platform like M-Pesa.
Yes.
The ability to be able to move money from one place to another, especially to withdraw and to deposit.
Yes.
You see, we're still 90% cash. Even the United States, with all its rails and what have you, is still in late 70s to 80s in cash.
Yes.
Even India, which introduced the national payment system, which every single member of the country is involved in, is still at 60 or 70% cash. Cash is not something that's going to disappear anytime soon, okay? A lot of efforts heading in that direction, but still that is the nature of the globe. We were not just talking about Kenya. So, M-Pesa as a payment channel, as a methodology of moving money between one person and the next, extremely successful. Now we're talking about your mobile penetration, isn't it? The phone,
yes,
isn't it?
Yes.
That I need. And of course, then you have 2 lines or 3 lines, right? One is for data, isn't it? Telecom of late has been doing very well because of their data bundles and so on.
Yes.
But do you ask anybody as to whether they use that telecom line to call? They don't. They're using it for data. Even for Airtel, they know exactly why they need that Airtel line, isn't it?
Yes.
It could be for some bundle. But for the payment channel, it's only this guy. It's really this guy.
Yeah.
So that will speak to the issue that we're talking about in terms of the penetration of mobile phones. But now, Elijah, if you will recall, when Michael Joseph was launching M-Shwari, what was that product actually all about? M-Shwari was not about lending. It's not a lending product. It's a savings product.
It's a savings product.
Yes, it was introduced as a savings product. You are then supposed to mobilize your extra resources and some income plan for your future, but have this safety net that in the event that you have an emergency, you can even actually borrow against it. Mm-hmm. Don't liquidate. You've saved 10,000, but you need 2,000. Don't liquidate this thing. Just borrow a little bit against. We will give you a small loan,
yes,
isn't it?
Yes.
See what it has morphed into. It's now a lending solution, right? So what am I driving at? You talked about policy and you talked about regulation, right? It's at that point in time where that emphasis should have been made and continue to be made to people. Say, we must continue to save. You must plan for your future. You must, because these are the things that open opportunities for that person to open the kiosk. It's the one that open opportunity for this other person to pursue a master's degree or a degree in something, or to look for a course either in tertiary or to look for something in agriculture. These are the things that, so resource mobilization, we are spending too much. We're spending too much. And again, it's driven from what people see from the leadership.
Yes.
I'm talking about governments. isn't it? When you find that we're in a situation where we are constantly borrowing, invariably this message is sent down to the people on the ground, isn't it? We take cue only from what we see from up there. So then that interest in terms of borrowing, it's not there, or the importance of it. And then I talked to you about a safety net, this implied safety net. You see, it extends even further to if somebody passed away, we know that we can do a little mchango. Now even people start becoming almost helpless, isn't it? They think that every problem that is to be solved for will be because of mchango. This is what I'm talking about. I'm talking about our value system. I'm talking about who we are as a people. So government definitely has a strong role to play, yes. But they must they must demonstrate themselves first.
Pretty much.
Prudence, managing funding, so on.
Now, as we clear, I'm informed that we only have 2 minutes for this conversation, Fred. MFS now, what do you want to morph into? You mentioned a very particular area, insurance lending. That's another area that, I mean, we look at the penetration. I mean, we are doing worse off vis-a-vis our economic performance, even vis-a-vis our GDP. How do you see yourself unlocking this space as a MFS? In 2 minutes, if you can, so we clear this conversation.
So again, as we were, on our journey to serve, the last mile and look for how to work with them around financial services, we also discovered a gap around insurance. Individuals need insurance for their own medical survival in case some emergency happens. Individuals down there also need insurance for their businesses, just the same way that this building is insured and your business here is insured. Why shouldn't that person also be insured, their stock and so on? We found there was a gap. There was no insurance for them. Products are up here, but how they get to the people down there is very difficult. And insurance industry is also same kind of like rigidity and regulation around even this same one of banking, same thing. So we saw our role, again, as if you want to call us a fintech, as being able to bridge between that guy up here, who he wants to get the product down, but he doesn't even know how to do it. He doesn't know how to engage. That's our role. The same way that we did with the distributor, all the way down to the person in the kiosk and retail. We said this person needs insurance. We've got technology. We're going to create the technology channel through mobile so that they can procure from you and then also benefit from this thing we talk about called financial inclusion. So for us, we're driven by, can that person access? Are there products for that person? We talk to the people who own the product, panel beat it and take it down. That's what we do. And that's how we have been able to do insurance. In fact, you'll see a launch coming in a couple of weeks. Quite interesting. So we are just innovating with underwriters. Those who are like-minded, those who are willing to go to the ground. We say we are here to work with you from a technology perspective. But if you're talking about financial inclusion, insurance must be part and parcel of the conversation. How do we get to the people so that they can also partake in this industry?
Fred, make sure you call me to the launch. It's a particular area that I'm actually interested in. Because I've seen different people talk about cracking the code when it comes to the insurance penetration in the country. It's seemingly not working.
Sure.
Make sure you call me to the launch.
I will.
Quite a lovely conversation this morning. We were with Fred, really talking about financial inclusion in the country. He's mentioned a couple of very fantastic points. We promise you, take him online at Metropole TVK, and the good thing about that is going to actually rewind him and start listening again. He's mentioned a couple of good points on exactly what he thinks about financial inclusion in the country and why MFS is embedded in that particular conversation. And lastly, on that particular area, that they're launching a product that is going to tackle insurance penetration in this country. Something good to look at to that particular end as well. Now, once we come back, let's talk about BAT. That's stellar performance. If you're really a shareholder, you do know it's 5 billion for your dividend for the year ended at 31st December 2021. And then I asked this question. Since we're talking about digital solutions this morning, what is the Central Bank of Kenya against? Is it just Bitcoin or the entire digital currency conversation? Once we come back here on a Business Hour.